has been your take, sort of one of the big takeaways we can get so far from the retail guys?
Well, contrary to popular opinion from last week's, implosion of earnings, the consumer is very much still alive. They're just shopping at Target. Target reported comps today that were up over 3%. And guess what? 3/4 of that comp was traffic. That is unheard of here. So that is where investors need to look. They need to look where the retailers are actually driving traffic, not just ticket.
So that's a really important point. How many people are coming in versus what the price is? Because you have fewer people come in and make more money if the prices are higher. What's the situation in Walmart? Because Walmart had some pretty good numbers too.
Absolutely, and Walmart's the other one. So Walmart and Target have spent an incredible amount of investment dollars over the last several years going after Amazon. So both of them are offering same-day delivery, pick up curbside. So Target talked about today, 3/4 of their online fulfillment actually came from people coming to the stores to pick up. So that's incredible. That's a way to leverage, and it's also a way to meet the consumer where they want to shop.
So do we learn anything that like Amazon can't rule everything, or there's room for some players? Like if you own Amazon, then what's your lens?
Right. So I think there's definitely room for, it's not just an Amazon world. And I think Target and Walmart have very much proven that. Of course, there are other laggards like the department stores or like a Kohl's, a Gap, a Victoria's Secret who have really just lost their way and who have not invested in their brand in the stores and also they have not kept relevant with what the consumer wants. Target is doing private label brands. That's really what's driving the business.
So it's great to chase after Amazon. What does it do to your margins? I mean, because they've had to invest. Both Walmart and Target have to invest. Does it really compress the margins?
So in the short term, it does, obviously, because you have to spend on your supply chain. The more online delivery you do, your margins come down. But if you look at Target's results today, their gross margins were up 30 basis points.
Wow.
Nobody in retail is talking about margins up. So if you invest, but then eventually you get the comp coming along, you're able to leverage your margins and your expenses. And that's exactly the playbook that Target's gone by.